I mean, this is, of course, your daily financial news. We aim to do this at 7:30 every day, 7:30 a.m. Pacific. Before we get started, two real quick announcements. First and foremost, don't forget we have our live Q&A in about 27 minutes. I will do it from my computer. So I have more real estate and I can take your questions. I do have some that I've collected throughout the week, but hopefully you can join me there, ask some questions. We can really talk about what I see evolving, changing, going on in the real estate market. Should be a fun Q&A today. I'm excited by what is coming, both for consumers, but also for investors, especially in the real estate space, because what have we been starving for in most markets? That is inventory. And I think inventory has kind of run its course. It's had the perfect storm to take it to record lows. And we can talk about why that is going to turn around here sometime summer-ish. So that should be fun. And then, of course, if you could do me one huge favor, I'm looking for 29 more reviews on this One Rental at a Time book on Amazon and or Audible. That would be great. I think being a self-published author and getting to 500 five-star reviews would be fantastic. So if you can do me a favor and take 2 minutes out of your day and do that for me, I will be forever grateful. So as we move forward, a couple of things that I want to point out. First off, two things. End of Q1 is Wednesday. Can you believe that? 1/4 of 2021 is over. That's just, I don't know, is it just me? Or did that go by like way fast? It seems like just yesterday we were celebrating 2021 getting here, and now we are 25% done with 2021. If you're a real estate investor, as I've shared with you yesterday, and likely would do on today's live Q&A, it's time to do your homework. It's time to get ready. We will not be suffering record low inventories as we exit this year. I don't know when it will turn in your market specifically, but I know if you don't get ready, you won't be ready when the market changes. Get ready now. I am so excited. I love seeing my students put deals up in our private Facebook group. It is going to be very, very good year for us because why? We do our homework. We know what average is, and my students only do good or great deals. It's a lot of fun to see. And then the other thing about this week is Friday, the stock market is closed. I actually didn't know that until I looked. I really don't know what day it is unless I'm doing this show. So again, the stock market is closed Friday. It is Good Friday, so be aware of that. And then lastly, I think there's a couple of announcements that could really be market moving on the 10-year. The 10-year has been a thorn in the side of the highly, what do you want to call it? High multiple stocks. So I think this week could have a couple of announcements that hit it. But let's talk about it. So first and foremost, let's talk about the week ahead. I like to do this on either Saturday or Sunday. I collected it today. There's not really any company announcements or earnings announcements that kind of move the needle, but there's plenty of economics stuff going on that we need to pay attention to because why? We're concerned about the consumer. We're concerned about the cost of capital, and we like to know what's going on with real estate. We're going to start off hot on Tuesday. Tuesday, we got a couple of things going on. First, we got CaseShiller home prices. Remember, he does the biggest 20, then the biggest 10 markets. I suspect we're going to be probably north of 8%, and it's going to be interesting. In addition to that, we have a more national home price coming out. That's FHFA. We'll also be sharing their home prices. I consider FHFA a far more national view. Now, if you're one of my students or followers on the channel, you know that all real estate is local, especially single-family homes. But as somebody who's trying to help the world with real estate, I look at these national trends to see what's going on. Plus, it is one of those metrics that I like to point at to remind everybody that was calling for a crash in 2020 or frankly 2021 that they are wrong. That stuff, I don't know. Do you think they do that just to get clicks, or do you really think the world's just going to fall apart and real estate's going to implode 20% like tomorrow? It doesn't work that way with real estate, as you know, but Maybe they think it is. I don't know. We also have consumer confidence. That's going to be a big one, right? This is going to be the one that reports kind of the impact from the stimulus. I suspect in general, people are going to be feeling pretty good, but we shall see. And then again, I think we just have to watch Fed speeches. They are starting to, I don't think the Fed presidents are really on the same page. We have some kind of speaking from the gospel of we won't raise rates for years, but there's other ones that are saying, you know what, sorry, buddy. Especially the guy from Dallas. He's like, you guys are crazy. We are going to raise rates next year. So it's a lot of exciting stuff going on. Raising rates is important to us because, again, it's a huge factor in cost of capital. Also, just so you know, it's also a factor in affordability. If you haven't connected the dots, interest rates is a key component, to the affordability index, which I'd watch closely. Watching a monthly metric closely is kind of a stretch. I look at it monthly. And then again, we have a couple of Fed speeches. And again, I'm going to be watching the Fed speeches because one of them is going to say something stupid the market's not going to like, and it's just going to go haywire. It's going to be entertaining. You just never know which president, which time, but it will happen. Wednesday, we have ADP job reports, and as we've talked about for nearly 2 years now, this one's first. It always comes out a day ahead of the monthly one. It's kind of our first taste of what happened the month prior, but it's kind of been off the last couple of months. It hasn't even been close. But I think everybody expects March job numbers to be positive. They're actually calling for north of 600,000 jobs creation. Let's all hope that's low. Let's hope for 1 million. Let's hope for 2 million. Let's get this dark days behind us. Although I think it will be somewhere between 5 and 750. But I do expect April, right, the month we're entering, that's going to be a pretty good month, man. I see just in my little world here, more job openings, job postings. Restaurants are opening, which means hiring back servers and busboys and hostess and all of that. So it's gonna feel good. I think it's gonna feel good. It may not feel great for everyone, but it will feel better for most. And damn it, that's a start. Then we go, pending home sales is also on Wednesday. Pending home sales is going to be interesting. I suspect it will be, hey, look at that. We have no inventory. Hey, look at that. We've got, days on market of 23 or something. It's going to be interesting. Thursday's a big day. We finally broke below 700,000. We did a little happy dance with Jonathan Twombly last week on Thursday. Let's hope that trend continues. It wasn't one off. And let's actually hope for it to continue lower. Let's get that, the angle of descent increasing. Let's go from, 684 new claims to, let's hope for 650, maybe 640. Let's get this American economy cranking so that we can raise more and more ships and get more and more consumers going and put these dark days behind us. What else do we got? We got Friday. Again, the stock market is closed, but there is a big report Friday. It's going to be interesting. This big report comes out on the day the stock market's closed. That can be interesting sometimes. And that is the March unemployment number. They're actually calling for U3 to be 6%, going down from 6.2 the month before. You've heard me say it a dozen times, and I'll say it again because it is so useless. U3 is always been a problematic metric, in my opinion, but it was at least, historically speaking, it gave us some information. The U3 in this health crisis is the most useless, most misquoted, or most quoted, unhelpful economic statistic we can have. We need to be talking about U6, the discouraged workers, the people that have chosen to come home. We could actually see, in my opinion, and I likely will see in probably April or May, what's going to happen is the unemployment number, U3, is going to go up. And that's going to shock everybody. It's going to be like, oh my God, what is going on? And folks, that's because U6 is kicking in. People are coming off the sidelines. Moms who have had to make that tough choice to watch their kids and all of that, they're going to come back to the workforce. And that's going to artificially bump up U3. I don't know when it's going to happen, but it's going to happen. And, people are going to freak out just because U3 is just utter nonsense in this environment. Next up, we need to realize that the Fed has put out the punch bowl and they've spiked it. Again, they've laced it with a bunch of alcohol and all that fun stuff. as the punch ball gets lower and lower, and it's still there, right? They can't take it away. I'm left remembering some parties in my youth where you knew it was a fun party, you wanted to be there, but at some point you knew it was time to go. The party was still going, people were still having a good time, but something just told you, honey, it's time to go, right? You may miss a couple of things that will be interesting, but there's always that point in a party where it goes from fun to, oh my God, something's going on. And I don't know when that's going to happen in our economy with all this cheap money and printing and all of that, but it's coming. There will be unintended consequences. They will hurt. But do yourself a favor, get ready. I think build cash reserves and make sure you're ready for what's coming. So it's going to be interesting. And then, of course, we got to talk about good old Bernie Sanders. Haven't talked about him in a while. He is making noise around the estate tax and taxing the rich and the wealthy and all of that. But I looked at his estate plan. Don't be misguided. His estate plan could impact you and I. I know he likes to talk about the billionaires and all of that, but when you read his estate plan, at least I read the summary of his estate plan, he's actually going to impact anybody who has a net worth over $3.5 million. I think if you get into real estate, you get into real estate for a couple of decades, you're probably going to amass a net worth of that number. So realize that Bernie Sanders is coming after you. It's hard to earn money for all of us, lifetime of work. But yeah, he's coming after lots of us. And it's just interesting to see someone who's been been in government for his entire career become a multimillionaire. That always bothers me. Does that bother you? That bothers me. This bothers me. Anyways, that's what I got for today. I got to get ready for our live Q&A in now 15 minutes. This is always a fun show for me. Come back and join me. Have fun. Have a great weekend. Today's a great day to make some money. Let's be better than yesterday. Bye-bye.